Hey everybody, hope you're all well. Welcome to another episode of EGIL.TRADE, brought to you by Let's Talk Crypto podcast and proudly sponsored by CryptoFish.com. Welcome to another day of price action. As you can see, I've got the charts up behind me. But as always, if you're looking to buy Bitcoin, please head on over to CryptoFish.com, easy to use, non-custodial platform where you can buy Bitcoin using credit card, debit card, ACH, SEPA if you're in Europe, US wire is coming soon, Poly for Australia, and Ideal payments for the Netherlands. Right now, I'm going to jump straight into the charts. As you can see, I've got the monthly chart up behind me. I've been off for a few days, taking a bit of a break, but I'm back at my desk and I'm ready to have a look at the charts. I have had a little brief look this morning, but nothing major. And for a lot, what I'm going to say today, or what I'm looking at right now, it's quite fresh for me. As usual, for those who haven't seen before, what I have here is the monthly chart. I've marked out the yearly opens. I tend to find that Bitcoin likes to come back and tag the yearly opens. They're significant levels for me. And generally, if you look at most open and closes of higher time frames, there is a bit of interest there where price stops. So it's kind of where they come to an agreement between buyers and sellers, and the month or the period ends. So here I have it on the monthly time frame. I marked it off on the yearlies, and we'll dive deeper in. As you can see, I have marked off zones of interest, zones of liquidity, or support and resistance. I prefer to use these zones. I do have other lines dotted all over the place, which I've put in on lower time frames, which I will get rid of because they look like quite a mess at the moment. But I'll do that on the lower time frame soon. We are living healthily above the 21 EMA on both the monthly and the weekly, as you can see here in this cluster of moving averages. And what I want you guys to note here is that all these moving averages are turning up now. Of course, we've got the 200 EMA and the 200 SMA, which we're living very far above, well below us here. They're also in an upward sort of posture, but even the lower time frames, the 21 EMA, the 30 SMA, the 10 SMA, the 50 SMA, everything is swinging around the 55 EMA and starting to point up. And if you look into the past history, you'll notice over here you're getting a sort of similar type of action over here, where all the lower period time frames start crossing above the higher time frames, and they get the splayed out effect here, and you can see what comes after that. Generally, it gives you a good indication of what the upcoming trend will be. Now, there are some of you out there who probably argue that, well, we've already been in an upward trajectory for a long time now, Wes. What are you talking about? Yes, that's true, but as they say, the trend is your friend until the end. But I think it's quite poignant to point out that we haven't created a higher high yet on the weekly on a closing basis yet, and that would be the first step in creating a legitimate uptrend. So what we would need is a higher high, and then at some stage to come back in and set a higher low. Then from that point onwards, officially we have what we call an uptrend. It is safe to say that yes, this is an upward movement, and we are trending upwards. But I think that if you look carefully here at this cluster of EMAs, and what I'll do is I'll just zoom in here. I'll get rid of the drawing tools and just look carefully at the EMAs, how they're all converging around here, and you're going to get the lower period time frame EMAs and MAs crossing above the higher time frame ones. And likewise here, you'll see, although not as bunched up, you'll see a sort of similar effect here. Take note of where this 10 SMA is, this pink line here. It's coming down, crosses through the 50, crosses through the 30 SMA, crosses through the 21 EMA, crosses through the 55 EMA, and it's off to the races. Now, likewise with the other periods, you'll see that they're crossing upwards. And lo and behold, you potentially could have a similar action happening within the next couple ticks, which means a couple weeks, because remember, this is a weekly time frame. It takes a bit of time to print these candles. And what I also want to point out here is that we did have a very similar posturing over here on this upward move. All right, so much so that the 10 SMA did manage to cross through most of these other EMAs and SMAs, and all the others were also bunching up and getting ready to cross upwards. And ultimately, it turned out to be a fake out. Price action pulled into it. Not only did it pull into it, it smashed right through. Now we are round about here in this sort of posturing. You see where the 10 SMA is. We are in this type of posturing. And now I'm not saying this is a fractal or anything, but just look at price action very carefully. We're living above all these EMAs and SMAs, as we were doing over here, all right? They're all bunching up and coming close together, and this is about to cross over the higher period ones. Same action of here, and this crashed down through. So this is why I hold a lot of importance on us actually closing a higher weekly candle above this area here to try and negate this sort of fake out that we had here. It's not to say that it couldn't happen again, but I think it's unlikely. We've tapped into this resistance quite a few times now, and with every tap into it, I believe it is getting weaker. So this is what I'm watching for on the weekly time frame. What I want to see is over the next week or two, a candle closing above about the 10.1 to 10.2 area, or even if we just start ticking above, I would say the 10.5 area, that would probably do it for me. But to be more conservative, I would like to see us close a weekly candle above the 10.2 area and set in a higher high, and then I do lean towards us then making our way up higher. Also looking at these SMAs and EMAs here, it does look very healthy to me. It looks like we potentially could do it this time around. I'm going to move down to a 2-day time frame. I'm leaving the drawing tools off just so we can have a little look at all the EMAs and SMAs. If you remember correctly, we did have that death cross, which was a bit of a fake out. We ended up grinding back up against the 55 EMA, breaking through, smashing through the 200 EMA and smashing through the 200 SMA, coming back down, ultimately testing the 21 EMA, and you could say probably testing this golden cross, which was undone by this upward movement here. Death cross turns into golden cross, come back, test into it. That's very healthy. We like to see price action pull into crosses and not be too far away from them for them to have some efficacy. And then all the bots and algorithms can play off that. So now what's happening is we've had this bounce, we've come back and very healthily tested off the 10 SMA. Now that is bullish. In a sign of a strong market, you'll see that the price keeps pulling back into the shortest period EMA or SMAs, whatever you choose. And if it keeps reacting and people are buying off that area, it shows a much more bullish action. The buyers are stepping in the market and buying the dips and pushing price up. Okay, so I am bullish based on the EMAs, both on the weekly and the 2-day. Let's go down to the 1-day time frame. What do we have here? We have got our golden cross. Again, we've pulled back down into, in fact, we've come and tested right at the 200 EMA and 200 SMA here and healthily bounced right off it. Come back down, tested back to the 10 SMA, held. 10 SMA is now pointing up. Look at this also. This is the 30 SMA here that I have in this gray line, and you'll see that as soon as it ticked into a negative trajectory or slope, we lost it, and we came all the way down to 4.5, 3.5, 4,000, depending on what exchange. Look at how this 30 SMA had a downward slope all the way until here. If you had just taken a long right here when this 30 SMA, even if you waited for 2-3 ticks just to be sure, had an upward slope, look at what's happened since. The 30 SMA is a great and simple way of telling the trend on a daily. And we must remember at the end of the day, what are EMAs and SMAs there for? They're basically there to help you determine trend. They're basically moving averages, so you can see what trajectory or what the trend is at that time. So all these things have confluence with each other, whether you use trend lines, horizontals, EMAs or SMAs. They all have some sort of confluence together, and if you combine all of them, that's when it becomes deadly. All right, let's go down to the 12-hour time frame. Over here, we also did have our golden cross. Over here, you can see we were living a little bit further away from it, but we did eventually come back down and test the 55 EMA. Now, when we are a little bit further away from a golden cross like this, and we don't sort of pull into the EMAs as the golden cross is happening, it is also a healthy sign to see us come back and just see if everybody's on the same side of the trend and test one of the major EMAs. And we did. We came back, we tested the 55. We could even argue that we even tried to test the 200 and the 200 EMA here. Everybody was on the same side, and we went up. Participation is upwards. We're back in an upward trend here. Is this a cup and handle? Potentially. I don't know. The volume doesn't look 100% right, but anyway, whatever it is, it does look like reaccumulation to me. You can call it whatever you like. These curved bottoms here all leaning upwards like this, and we are getting higher lows here, although we are still technically with lower highs. I am leaning to the upside here, but I have been for a while now. We have been playing between about the 9,900 area and about the 9,400, 9,005 area lately. I still am holding a tiny strangle. I've got 10,000 calls and 10,000 strike calls and 9,500 put. So yeah, just letting that decay work for me, getting paid on theta that expires this Friday, and yeah, I'll probably sell it tomorrow. I don't need it to go all the way to the end. Anyway, I digress. Let's go back to the 2-day time frame and let's stick on my drawing tools here. What do we have here? Besides looking at the EMAs, we have been tapping into this pocket of resistance here. It has offered a bit of liquidity, and we have been selling off. We do seem to be respecting this little bit of a trend line here. I'll go down to the 1 day. It seems to be seen better. This ascending trend line over here, which forms part of this ascending channel, which we did break out of, come back inside and back on top. Look, the volume doesn't lend itself to this channel being valid anymore, but we do seem to be respecting this upward ascending trend line. So I will leave this bottom ascending trend line here for now. Just in the event that we do break this, I would anticipate that we would come into this pocket of support here, and it does have confluence with testing back to the golden cross or the 55-200 EMA and this ascending trend line and this pocket of support here, which you'll see comes from here. And if you go further back in time, you'll see that we've got a lot of confluence around that area. However, as I said, I'm not leaning that way right now. We are living healthily above this trend line here. The 1 day Stokes have crossed up. They do look like they're losing momentum. The CMF is looking good, and if we have a look at the RSI, yeah, we still are living above the EMA. We'll have to see what happens over the coming close. And if you see for a cross down, we need to cross between 9764. Shout out to Bully Paul. This is an absolutely amazing upgrade to the RSI indicator. I absolutely love it. Go check it out on TradingView and vote for him. I believe he's in some sort of competition of some sort, and he's an absolute genius. Just go and tap like and download all his indicators. They're absolutely amazing. So here we are back on the daily time frame here. We are living at this resistance here and grinding away at it. It is causing me to lean towards us breaking it sometime soon. I would say by the end of this week, hopefully sooner. I would like to see us break it during the week, and that would make me lean to us doing it within the next 24 to 48 hours. What I have noticed, if you go down to the lower time frames, I'll go down to the 4-hour time frame here, is that we have had some major sell-offs in this area. You can just see it just is seen better on the 4-hour. Every time we come into this pocket of resistance, there's been a strong sell-off. We've tried multiple times to get into the 98, 99 area and even reach up to nearly 10K, and it's led to almost instantaneous sell-offs. The thing I'd like to say about this is if you look at this does look like a bit of a cup and handle here, I would argue, and that does have a measured move. But if you look at this also looks like a bit of a cup and handle on sort of a more macro zoomed out view. But I think that this measured move here, if we had to take it, you'll probably find it'll take us into the 10.5 to 11K area. Let's have a look here. All right, so if we did break that, I would say, let's have a look. Look at that, right up to the 10.5, right to the edge of our next pocket of resistance. Quite frankly, I do think that if we do have a little bit of a pullback at 10.5, I think that we will still, I think there's a good chance that we actually grind on through that pretty quickly, because we've been accumulating for a while now. Pretty quickly and make our way towards about 11.5, 12K, which I have at the next area of interest here. More specifically, I'd like to see us hit about 11,400 to 11,500. But first things first, we need to confirm this. Let me put that back onto the 12-hour time frame. We need to confirm above this little cup and handle here. I know there is a greater cup and handle to be had, but I'm going to use this one for now. Hit the 10.5 area, potentially a little bit of a pullback, and then perhaps we squeeze on higher. Shorts have been increasing. Nothing dramatic or anything like that, but there is the potential to give a little bit of a squeeze while shorts cover their positions. So let's see what happens. I'm still leaning bullish. It's just my opinion. Take it as you wish. This is not financial advice, and this is definitely not investment advice. Do not take any trades or investments based on my recording or anybody on YouTube for that matter. Let's have a look at the crypto fear and greed index. We're ticking at a 52, so we're in the neutral zone. Why is this useful? When it's an extreme reads, we tend to have counter moves. And as you can see here, we've been slowly making our way up. Nothing dramatic. People are very, very reserved. They're not really giving in to the greed as yet, which makes me think that we've still got some more way to go before we get that real pullback to form a lower high. So I'm leaning towards us creating a higher high, my opinion, and really, really, really overextending that, perhaps eventually to 11.5 and beyond. All right, pushing the fear and greed index into high extreme reads on the greed side before I see any reasonable pullbacks. And when I say pullback, I mean Bitcoin style pullbacks of multiple thousands of dollars. Guys, happy trading out there. Enjoy the rest of the week. 2 days till the weekend. All the best, and we'll see you soon.